Coming to features of depreciation. Now what are the features of depreciation? The first one being that it is a process of reduction in value of fixed assets. And it is continuous process. It is a continuous process. We will take it as second feature. It is a continuous process. Now students, depreciation is a process of reduction in the value of fixed assets. We have just understood through its definition only that when we use fixed assets, their value goes down. So it leads to reduction in the value of fixed assets, and this process is continuous because we keep on using the assets continuously. The effect of time is always there, and technology keeps on getting out of date, and new things and new processes come into place. So we can say that it is a continuous process. Then very important, it is a non-cash expense. It is a non-cash expense. Now students, depreciation is a non-cash expense. The amount that is reduced on the fixed assets is not paid to anybody. It merely means that you have to write off the capital expenditure that you have incurred earlier. So it involves writing off capital expenditure that has been incurred earlier. That means any capital expenditure, let's say you purchased a machine for rupees 10 lakh. Now when you have purchased a particular machine for 10 lakh rupees, that becomes a capital expenditure. So that capital expenditure has to be written off over certain number of years. So depreciation merely says that you are writing off that expenditure. It is not an amount to be paid to anybody. So it is a non-cash expenditure. Then it involves charging of used value, obviously of assets, to profit and loss account. Now students, as a matching principle, it clearly states that any expenditure that is incurred in a particular year should be written off in the same year, or should be deducted out of the profits of the same year. Similarly, applying that concept to depreciation, that means we are using a particular asset during the year. So the amount of the value that we have used should be deducted out of the profit and loss for that particular year, so that we get the correct picture of profits of the business. Now students, revising the whole concept, depreciation is a process of reduction in the value of fixed assets. That means it leads to reduction in assets and is charged only on fixed assets. Then it is a continuous process. It continues over a period of time. It is a non-cash expense. That is the amount of depreciation that is actually incurred on an asset during a year is not paid to anybody. It is merely written off from the capital expenditure that we have incurred during the previous years. And lastly, as per matching concept, the amount of depreciation is actually written off or is actually subtracted from the profits and losses of a particular year to get the correct estimate of revenues and profits.